This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go on our Knowledge Center, which gives you a direct link to YouTube, where we've had well over 1 million views, multiple videos that help answer the questions that you have. And if you want to put an inquiry so we can talk about it on the show or create a Knowledge Center video, please send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And also you can go get this episode, any one of our previous episodes on Spotify, podcasts, you name it, folks. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary, folks. And we talk about all important topics of personal finance. That's where you are today, how retirement looks like, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And we are offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost to help relate this show to your specific situation. And we have offices all across the country that we can help you with. Folks, give us a buzz. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help answer those questions that you have to help with your financial situation. Folks, welcome. We have a lot to go over today. So much is going on right now in the market. You went from a few weeks ago freaking out, not sure what's going on in the economy. You had craziness going on in Japan and so on. And now just a few weeks later, you have the market on multiple day win streak. We're talking like 10 days here going on win streaks here almost. And looking at just multiple different reports. If you're catching our webcast here, you're probably seeing me looking down on some papers. Heck, you even got gold at all-time highs, over 2,500 an ounce. I mean, just interesting things that are going on. And all I can just come back to the point is where was your mind at a few weeks ago when we had that Monday that all of a sudden when you heard on the international markets that the markets were crashing and so on? What were you doing? Were you thinking on the short term of, oh my gosh, I can't afford to lose money? Were you not focused on your overall strategy, which is where your discipline comes into play? This is the biggest reason people fail in investments is discipline. I focus sometimes on the discipline of not consistently saving, but it's the discipline of understanding that you have an investment philosophy that's going to withstand the volatility that time brings. And if you don't like the volatility, it's not that your investments suck. It's just that you're taking too much risk. This is the beauty of having an investment portfolio, because when you look at just the key signs of how the economy is doing, sure, there is consumer sentiment, and I get it, right? I'm not here to even dispute how people feel warm and fuzzies inside. I'm not even discussing that. We're talking about just as a fact, outside of unemployment that is rising, which is important, you have companies that are making money. They're doing very, very well, and they're looking to get greedier right now as we're seeing a lot of these companies are moving in layoffs. A lot of them tech companies. Heck, so many tech companies, it's like a rite of passage to brag about the amount of employees that they have. They always say 1,000 plus employees. You know, there was some TikTok videos of somebody working at Twitter back in the day bragging about how they only worked 1 hour. Oh, I went to go take a nap. Oh, I played foosball. Oh, I went to do this, to go on a walk, whatever the case was. And now, and it's funny because then you had Twitter, which is now X, got bought out, and Elon Musk specifically, got rid of 90% of their staff. It's just interesting how the concept of people and the quality of work that people are doing has deteriorated in that tech field. And oh, by the way, they're making hundreds of thousands of dollars a year. So tech companies are realizing this, and you are seeing profits of these companies starting to increase. Like the net income is getting better, which is why you're seeing part of the stocks increase. Now, maybe some of the growth numbers have slowed down. Maybe there's still concerns with some lawsuits, whether it's Amazon, Google, or whatever. But the idea of all of this is what are you doing right now in your overall portfolio? Because there's some key just recaps that I'm going to go over of just how the market has been going, whether it's CPI related, whether it's PPI, whether it's just overall economic data, outlook of recessions. I mean, these are things that I'm going to be discussing. So hang tight. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend. And we're talking about all important topics of personal finance. So today we are going over kind of some key concepts here of just economic data that is starting to roll in. And the first one is I wanted to go over the Commerce Department reporting that building permits fell by 1.4 million for the first time since the depth of the pandemic. Actually, housing starts also fell to their lowest number in 4 years. So yet again, just going over some of this data here of just slowing down potential that could be happening. And it makes sense, right? When interest rates are so high, it's logical to assume that you're not going to be able to just do a land development projects when you used to be able to borrow at 3 to 5%, and now those project costs are 8 to 10+%, right? It's 2 to 3 times more expensive to do development. And yet we do have a housing crisis. So here's another interesting one. Retail sales have went up to 1% in July, the best showing in 18 months. This is a sign of a healthy discretionary spending. So these are other positive things to go over. Let me switch up to other economists' inputs. I'm talking about the Fed projects that the federal fund rate will be around, projects that they'll be around 3.1% by the end of 2026. Indicating a shift of a more normalized interest rate environment. So they're looking at about 18 months from now that interest rate, or less than 18 months from now, that interest rates will go back down. Now, the end of free money era with real yields expected to remain positive. The days of ultra low interest rates are likely over, suggesting the economy can handle higher rates. And you know what? I've seen it. It makes sense. It's logical to me that this is happening. You're still seeing growth. You're still seeing home purchases. Now, keep in mind, the homes on the market are not where they used to be in the past, but it doesn't matter. We are seeing people more comfortable with and living the life of not being in debt, or companies not going deep into debt, not utilizing leverage as much, being smarter on your investment and your developments that you're potentially doing. A lot of people in a time like this are status quo in two ways. From an investment, right? They're not moving, they're not buying. Why? Because interest rate's so high. They're happy because they're probably grandfathered in 2 to 3% rate, and they're happy being in cash, earning 4 or 5% versus earning 10%. You don't want to take 10 times more risk for only 2 times the return. It's logical. So as interest rates come down, you'll see more money being deployed as well. Let me talk about other information that came out from the economists. The stock market is rebounding, with the S&P 500 and NASDAQ showing significant gains and softer than average inflation data. Inflation continues to be moderate, with CPI and PPI readings below expectations, while economic data such as retail sales and jobless claims suggest the U.S. economy is cooling but not in a recession. So it's interesting, right? Because the job markets, yes, we were under 3. Now we're what? 4.3% of unemployment. Still historically very low, but it is creeping up a little bit. Federal Reserve outlook. The recent data increase the likelihood of the Federal Reserve beginning rate cuts, potentially starting in September 18th. Now that also is a very logical thing as well. They've said it multiple times that they're going to be reducing rates starting this year. I mean, by releasing that type of pressure, whether it is on home buyers, whatever it's on businesses, and so on, it's logical. But for them to just think that it's going to go down to a 3% era is highly unlikely. It's just not realistic. So, what does this all mean to you? Because when you look at everything that's going on right now in the economy, you have markets that are performing even after the nonsense that are happening. But guess what works today may not work tomorrow. So that's where you have to start thinking, what can you do today to position yourself well for tomorrow? As long as you're investing in the markets, right? Because companies can go bad. What if the government says Google is monopolizing? Heck, Apple is monopolizing. What if they get upset at Tesla, or they get upset at Nvidia, or they get upset at Facebook? Which, by the way, all those companies, the government has imposed sanctions and been upset with them in the past. And maybe I should say fines versus sanctions, but the idea is they have been upset with these companies by controlling too much of market share. And so, even though some of them, not all of them, have been fined, a lot of them have been brought into Congress to testify, to say, what are you doing? You're impacting so many millions of people. That's too much power for one company. So we've seen this happen in the past where a monopoly has been said is happening. So these are risks that are realistic, especially with the large seven, the magnificent seven. By the way, which switches from time to time, this magnificent seven. So all I'm saying and all I'm suggesting is on something like this, when you take a look at extreme volatility, you have to make sure that you're consistently, on a regular basis, looking to buy and sell on a regular basis. Now, what if you don't have money to buy? Well, we're going to talk about that when we come back. We're going to take a quick little break, and we're going to talk about how you should always be buying and selling. I'm not telling you to be day trading, but to buy and hold and do nothing, to be 100% passive, you're going to lose versus a proactive portfolio. It's as simple as that, especially if you're looking to go just in an S&P 500 portfolio. So when we come back, we're going to talk more about this and the impact it can have on your portfolio. We'll be right back after a few words.
This is Gabriel Shahin, Certified Financial Planner and President of Falcon Wealth Planning. We wanted to offer you a free financial assessment for listening to the show so you can help relate it to your specific situation. We offer multiple services such as retirement planning, where you are today, how retirement looks like, talking about Social Security, real estate, planning, even if you own a business, talking about taxes, not just how to save money today, but also throughout retirement. Talk about investments, making sure you're avoiding those high fees, costs, commissions, and also estate planning and insurance, just making sure you're properly protected if, God forbid, something were to happen. And we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Give us a call. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, and fill out the form fill right there on our site. We would love to help you in your financial situation. We look forward to serving you.
Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. So today we just wanted to talk about the market as a whole and what you are doing in your portfolios, because we have a lot of people that are believing, and I've said it all the time, just buy the S&P 500, you'll be fine. Now that makes sense to a point, but to be 100% passive, you have to be careful a little bit, because that's one asset class and one indice that you're in. And it typically makes sense until you get to probably about $25,000. Then from there, 25,000 to 100,000, you probably want to add some mid cap, some small cap, some international involved in that. But also, once you start getting over $100,000, do you really want to be riding the wave of the index? I'll give you an example. The S&P 500 from 2000 to 2009 did nothing. I'm wrong. I lied. It lost 10%. Your $1 million would have been worth $900,000 after 10 years. Versus putting in a globally diversified portfolio, you could have almost doubled your money in that same time frame. So it's important for diversification. And what works today may not work tomorrow. And tomorrow might not just be tomorrow, but it might be a 5 to 10 year period. You've seen that with emerging markets, which historically speaking is the fastest growing asset class that's out there. It makes sense. Look at the name, emerging markets. But what has that done in 10 years? It's significantly underperformed, along with developed markets as well, where small caps are actually supposed to outperform S&P 500. It's supposed to outperform large caps, which is logical. They're smaller. There's premium investing in small caps that the market yields. But this is where it gets tricky. By being 100% passive, even if you buy VOO or VTI, which is S&P 500 or the total stock market index, even then, riding that wave could be dangerous because so much can happen in between. Let's ignore the tax alpha you could potentially get by a tax loss harvesting or doing an RMD while the market's low or a Roth conversion. Let's just ignore those because those have to potentially make sense for you. I can argue tax loss harvesting makes sense for everybody, but let's just ignore that. Let's talk about putting your money where a market drop doesn't, when it happens, you don't lose 40% of what you have, which we've seen a few years back during COVID, which we've seen 2008, which we've seen in a cumulative history in the dot-com bubble. Let alone having all your money in certain asset classes. This is another risk people are having. All I'm telling you with this whole conversation is there's more to just buying and holding and being 100% passive. By being globally diversified, this is a crucial element to making sure that your money is not solely on one correlated asset class that just when the market drops, you drop. Where you can have your money in other asset classes where if the market drops, you actually make money you could actually make money depending on how uncorrelated you want it to be. But it's having a piece of your money all the way around because that way when something goes up, you take the profit and you shift it somewhere else. Being 100% passive isn't just buy and never sell. I said earlier, you have to buy and sell. Well, what if you have no more money to buy things in? How about you sell items that are actually making money to buy things that are on sale? I'll take it a step further. You don't have anything to buy. What would you sell? The crazy part is if I tell you what would you buy, you would probably buy the winners in your portfolio, the things that's making you money. I could argue that's the worst thing to buy. It's already gone up. And remember what investments are: risk and return. You have to take risk in investing to make money. Well, if you already made the money, you didn't take the risk to make that money. So then begs the question, what do you do in a time like now where the markets are great? Markets are up, I'll say. So in a time like then, do you just not invest and wait for a drop? Well, you could be waiting a while. I still know somebody who pulled his money out in 2009. He had $2.5 million, dropped down to almost 1.1 million. And to this day, he's waiting for the market to be back at 6,000. And I told him, he's absolutely crazy. That's an 85% drop in the market. He's literally going crazy. Because his portfolio, if he just did nothing, would probably be at $6 to $7 million now. And it's killing him. And it's literally killing him. And that was somebody I was trying to talk to so we can help them and work with them because I noticed they were in all cash. They didn't listen. Now, unfortunately, it's the ultimate sacrifice is the what if scenarios. Don't let that be you. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are talking about the basic concepts of your portfolio. And it doesn't matter if the news is good or bad. You should always be putting yourself in a situation to buy and sell, whether you have money on the sideline or not. Always build your portfolio where you could always take advantage of market volatility. Vanguard has a fantastic study that talks about, it used to be just based on just what a disciplined person could do on the investments. And it says if you do those things, you could save up to 3%. This could be tax loss harvesting. This could be asset location. This could be a lot of different things. But one thing that they didn't even value was telling you when not to jump off the cliff. Think about that for a second. I've had clients I've saved, I don't even know, probably, obviously millions. I'm going to go as saying 100% on their portfolio. Who cares that we charge 1%? Because of the discipline that was necessary in the portfolio. The whole idea with the concept that I'm sharing with you is to be proactive in your portfolio. Don't think just because you're buying and not selling, buying and holding forever. You could be in periods where you're fine, but there could be also periods where you need to make moves. You are just sitting in an asset class riding a wave that could take you 10 years to rebound. This is why a globally diversified portfolio is crucial, and there's no substitute to it. The problem is sometimes you might see the S&P 500 up 20 and maybe you're up 13. But that's because you have uncorrelated assets for a reason. These portfolios were designed to take the proper amount of risk. Now, what's proper? Well, there's what's called the efficiency frontier. Be right on that line where you're taking the perfect amount of risk versus the return that you'll get for that risk. You get rewarded for it. But you can't have your cake and eat it too. And so when you're having investments with different correlations, where one goes up, the other goes down. So you can't have them all go up together. And even if they all do go up together, they don't go up the same amount. One might go up 40%. One might go up 20. One might go up 1%. So there's multiple different asset classes that are necessary. And so that's why I said earlier when I started the show, this is why it's a question. If you lose money, it's not that your investments suck, depending on how you're invested in, of course, but it's a question of, are you taking too much risk in the portfolio? Because the markets are going to perform however they're going to perform. This is something that nobody out there with a crystal ball can promise. It's a lie if they are to say they know or they have some algorithm. That is a joke. That is humiliating for them. Shame on them. The SEC will come and shut them down shortly. The Twitter and X or whoever, they've shut down these accounts because they are fraudulent. You cannot lie and say you found this perfect algorithm to make you a lot of money. It does not exist. These are the things that I consistently tell you to be careful of. There is no shortcut to victory. It takes hard work, patience, and discipline. Investing in your portfolio is the exact same thing. You could say that in everything important in life. You could say this in school. You could say this in marriage. You could say this with kids and raising kids, let alone your financial stability and security. This is why we're offering a free financial assessment where we'll give you 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost to help relate this show to your specific situation. We want to be able to be that resource where you can ask those questions, where you can take a look at your situation and say, this is what you should be doing. Give us a call. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short, where there's right there on our website an inquiry where you can put your information and we'll reach out to you to give you a free assessment. It doesn't matter where you're located, because I see it all far too often. And sometimes people just come too late because they think, and there's been periods they've been doing well, but then they realize, man, I'm not comfortable with this volatility. They probably have $1 million portfolio, accounts dropped 3%. They lost $30,000, and all they need is, $3,000 a month. They almost feel like they lost a whole year's worth of what they needed to live on in just one day. And they just think, man, if I keep losing $30,000 a day, 5 years from now, I'll be broke. Well, probably 5 months from now, but you get what I'm saying. It's, what are you doing when markets are up? What are you doing when markets are down? When markets are down, it's easy. And if you don't understand that concept, that's a great indicator of you're probably not the right person to be making these decisions. When the market's down, that's when you buy. The hard part is when the market is up. Are you really going to sell your winners? And what are you going to buy? I'm telling you, you buy your losers. and maintain the integrity of the portfolio of the proper amount of risk versus reward. How much are you comfortable losing? I hate that question. That's like saying, where do you like to get punched in the face? What finger do you want me to chop off? No, none. But the reality is, at something like this, it is real. And there's always a strategy behind it, because I promise you, when somebody's losing money, somebody else is making it. Your job is to capture those winners.
That was a fast show, folks. I want to thank you for tuning in with us this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and visit our Knowledge Center, which redirects you to YouTube. We have over 1 million views, folks. And if you want us to discuss anything on YouTube, on the show, whatever, send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And if you want this episode, any one of our previous episodes, you can go on podcast, Spotify. We have them all there. And folks, we want to thank you for your trust. We want you to feel free and feel comfortable. Reach out with any questions that you have. Have a great week, and God bless.